Hi everyone, Adam Harris here from Trade with Precision, and welcome to IC Markets Market Commentary. I'm going to take you through the markets I'm looking at this week. I'm going to start off here with the dollar index. Now, it's not super exciting and it can get a bit frustrating at times, but the dollar index is still stuck smack bang in the middle of the range that it has been in for a year now. If we move across and compare that to euro dollar, you can see that we are actually testing the upper limits of that range, which is at that 1.18 level. If we go down to the daily, you can see we've produced a bit of a bullish candle here off the 20-period moving average in the buy zone. So we have the 50, 20, and 10 moving average geometry in a bullish formation. We've got the MACD above zero, and we're looking, I would say, slightly more bullish than we are bearish. So I wouldn't be surprised if we do see a break above the high here. We might take another run at that 1.18 level this week. If we have a look at dollar yen, this is very much range bound on the daily, and this key level of 160 being a very significant level historically. So I would avoid engaging with dollar yen for the time being or until further notice. Having a look here at gold. Gold has gone from an uptrend. This is on the 4-hour time frame. Gold has gone from an uptrend into a sideways or no trend state. So there really isn't very much to be gained from engaging in it currently. And the same actually applies towards silver. Silver also uptrend recently and then going into a bit of a downtrend, but you can see the overall range is a lot less than it has been previously. And so although we've had quite a bit of opportunities with both gold and silver over the last year, currently they're not really offering that much. We move on to crude oil, and this I like. Again on the 4-hour, I'm still principally bullish on this. You can see we've actually gone from a downtrend of lower highs, lower lows to a very messy inverted head and shoulders, which is simply a change of trend. Here you can see we've broken up through this level of resistance. We've retested it. We're retesting it again here. We've got a couple of small wicks and a nice bullish candle here. So if once the market's open, we break above the high here, my expectation is the market will work its way to the upside. So there could be some shorter term buying opportunities. Now let's have a look at the global markets. An incredibly big move here. Overall, we are very nice and bullish from a monthly perspective. We've had a very nice correction. Let's just zoom in there. We've had a very nice pullback and a correction. We're not that overextended. We had a big run up. We were due for a correction. We've had a nice big correction. We've had a very strong recovery. So we're not that overextended on the monthly, which is a good thing. From a weekly perspective, we're also not that overextended from the moving averages, but from a daily perspective, we've actually just had a really, really big run, and we could do with a nice, decent pullback. That being said, you can see here we're now connecting with the 10-period moving average, and we've got the 50, 20, and 10 in a nice bullish formation. So, and we've consolidated for a week. So we actually are getting to a place or point of equilibrium where the markets might actually attempt to work their way to the upside. Taking all of that into account, I would prefer to see a nice, strong bullish candle form here this week in this area, even if it does correct down towards the 48361 level, and then a nice bullish green candle to form there. I'd love for that to be a nice potential buying opportunity if the trend is deciding to continue to the upside. Looking at the S&P, you can see a consolidation at a break higher. This is very much overextended in my view, but interesting, you've got your 200, 50, 20, and 10 in a bullish formation. We're sitting above zero on the MACD. A lot of this is all just pointing towards bullish momentum. In fact, extremely bullish momentum. I would generally and seriously prefer a deeper pullback here before getting into this. That is my concern. We're very overextended, but we are bullish. And the NASDAQ is even worse. This one you can see is just 250, 20, and 10. Very bullish, incredibly strong run. I think this might be one of the single biggest straight runs that I've seen in a very, very long time. And it's just the angle of it is incredibly bullish. So at some point we might find that it does need to come back for a correction. And it doesn't look like it wants to do it anytime soon. So I was hoping for that pullback last week. I'm going to put it onto the agenda this week. At some point, we do need to have a retracement, but then I'll be looking for buying opportunities and I'll be looking for the price to pull back into these key levels. Looking at the Russell 2000, very nice consolidation. Again, very similar to the Dow. I'd love a pullback down towards a key level and then looking for it to continue to the upside. But the markets may just want to push on. All right, let's have a look at the FTSE. Let's go away from the US. Again, here we pull back into these key levels. This is a little bit of a critical area at the moment. It's pulled back enough. I'd like to see this form a nice bullish candle Monday or Tuesday and then take off from here. It's welcome to come back down a little bit more towards that 10,200 level. That will still be valid. But I am watching this, and it has been incredibly bullish. It is a very nice, healthy pullback at this time. We do have a lower high, but that doesn't mean anything just yet until we decide what happens with these key levels. Having a look at Euro stocks as well for perspective, you can see here again from a monthly perspective, we've had a really nice strong correction, nice bullish candle. We've produced a swing low there. Overall, this is not overextended. Looks nice and healthy. We've got a bit of a weekly pullback, and we finished with a bit of a bullish wick there. So again, we're still more bullish than we are bearish. And we have a nice bullish candle that's formed in the 10 and 20 moving averages. So this week, again, across the board, I'm looking for these markets to break higher and continue up. And then finishing off with Bitcoin. This is on the 4-hour time frame. I beg your pardon. This is actually on the daily. The daily has been tickling up. Oh, what is the word I'm looking? Trickling up is what I was going to say, and ticking up. And I just confused the two. But we've broken outside of this range, which is very significant. We've come back, we've produced a bullish candle and continued up. We pull back again. We're producing a small indecision candle and currently a nice little bit of a bullish candle that's open at the moment. So right now, the momentum is towards the upside. Again, we have got that 50, 20, and 10 moving average in a nice bullish order angle and separation, and so for now the momentum is to the upside. I expect this to continue to work its way up, and ideally, let's see if we can get past this 80,250 level. Thank you, ladies and gentlemen. Have a great week.